The Federal Reserve held rates steady but cut its expectations for future rate increases this year. I'm joined now by Gus Fauscher, Deputy Chief Economist at PNC. Gus, good to see you. And I think the headline really was this lowered expectation in terms of the number of interest rate increases we'll see this year.
That's right. The FOMC cut its projections. They're now projecting 2 interest rate increases in the Fed funds rate in 2016, and that's down from 4 when they last made their projections at the end of 2015.
So should we worry that the economy is not growing as fast, or should we be relieved that the Fed is taking it slow?
I think we should be relieved. I think even when the Fed made its projections in December, 4 rate increases this year was unrealistic. I don't think markets were expecting that at all. I think given particularly the turmoil we've had in global financial markets this year, that the Fed wants to take it more slowly. And so I think 2 rate increases matches what the market is looking for, and it seems to me a realistic path of tightening.
And when you mention those risks, it is something that Janet Yellen mentioned in her news conference. It was also in the statement about these global and financial risks. But I guess it's hard for investors to try to quantify these risks in terms of whether it does threaten the U.S. at all in terms of maintaining a slow and steady growth pace.
Well, it's also difficult for the FOMC to quantify. The FOMC didn't say whether risks are weighted to the upside or downside. That's the same thing that they did in January. They kind of punted on that. So they're having difficulty in quantifying it as well. I think that the U.S. economy is growing at a moderate pace right now. I think that risks are probably to the downside, primarily because of what's going on overseas. But in her press conference, Chair Yellen said that generally either members think that the risks are balanced or that they're slightly to the downside.
At this point, that issue of inflation eventually showing some signs of life was brought up once again. Where do you see inflation going? It seems that the Fed keeps waiting for signs, and another month goes by and we don't see it.
We are starting to see some stronger inflation using the consumer price index. The Fed uses the personal consumption expenditures price index. I would expect that will show signs of higher inflation as oil prices stabilize, as the dollar stabilizes, and in fact the dollar weakened a bit today with the news. So I think that we will see stronger inflation, and it is going to gradually move toward that 2% target.
The Fed seems happy with what we're seeing in the job market. What about business investment? That was highlighted as still an area where we're struggling a bit.
That's right. I mean, obviously, I think the downturn in energy production has hit investment in energy infrastructure, so that's a drag. And then I think generally businesses are still a little bit reluctant to invest. That being said, we do have strength in commercial construction. That's a positive. In some aspects of investment in computer technology, that type of thing. So I think that as conditions stabilize, as financial markets stabilize, that we will see stronger investment growth in 2016.
The Fed did lower its outlook for GDP slightly for this year. Any concern in your mind on that?
No, I think the Fed is just catching up to where markets are and to what private forecasters are expecting. I think that GDP growth is going to remain moderate. We are going to get a little bit of a drag in the first half of this year from slower growth in investment in inventories. As we mentioned, overseas is a drag with the strong dollar and weak global growth. So I think it's just a question of the Fed catching up to where the economy really is.
You know, Gus, back in the day, people would talk about the Goldilocks economy. Is this a Goldilocks economy?
I think we could stand to see a bit stronger growth, better improvement in the labor market, stronger wage growth. So I think it's perhaps a little bit too cold. It's not freezing cold. We're not anywhere close to recession, but we could stand with a little more warmth in this economy. And particularly we have some drags from overseas. There's not much the Fed can do about that. Just try to sit them out and make sure that the domestic fundamentals remain pretty solid.
Gus Fauscher, PNC, nice to talk to you again. Thanks.
All right. Thank you, Rhonda.
I'm Rhonda Schaffler for The Street.